Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I own a valuation company in St. Louis, Missouri. I have the privilege of discussing nonprofit organizations, accounting, strategic planning, and management today with Tosha Anderson, a CPA and nonprofit accounting expert in St. Louis, Missouri. Another thing, let's talk about some of the differences in accounting for a nonprofit organization as opposed to a for-profit business. I mean, is it basically the same type of accounting, or are there some unique differences?
Yeah, in some ways they're very similar. So before I focused a lot of energy working in the nonprofit space, I used to spend a lot of time in the construction space. And nonprofits, if I were to compare it to anything like a for-profit business, imagine a business that tracks all of their revenues and expenses by individual project. Construction is a great example, by job, right? Or a creative firm that has to track revenues and expenses by client to make sure they're assessing what the profitability is by that client. The nonprofit has to do that in a very similar way, but they do it by grant. So not necessarily managing the profitability, but how much of those dollars that we received are still eligible for spending, right? And we have to track that. So balancing how much revenue do we still have to spend by funder? So very similar to like a construction company or anyone else that would manage it by project. But then also, are you carrying it over for the next fiscal year? Are we going to be spending it? Should we budget to spend it? So we're really kind of morphing this idea of project or job costing combined with crossing fiscal years. And also not just you spend it in a certain time period, but you must spend it on purple pens rather than red pens. So tracking not just the timing of things, but the purpose of things, and then who the individual donors are. And then also reporting on that, which of course the reporting requirements for funders are generally all different as well. They like to look at them in different ways. So it's a little bit of a balancing act in many ways, but for the most part, it seems complex because you have so many different types of jobs you're trying to track at any given time. And frankly, the nonprofit space struggles on that more than they would probably like to admit. It's just really difficult, and not because conceptually it's difficult. It's designing the system and having the right person skilled in how to use that system. And by system, I'm truly talking about the accounting software at this time, how to set it up the right way and how to consistently apply things the right way. And once you do that, it becomes much, much easier. But going back to my point before, many nonprofit organizations lack the experience, the skill set, or just the time or money available to properly set that up. And oftentimes it's a training issue, or it's just a funding issue and a reinvestment issue. But it's just like any other for-profit business, it has to track on a really granular level.
Well, and I think if I'm a nonprofit and I'm looking at Tosha Anderson and her company, and I'm like, oh my gosh, I can't afford this. I don't barely have enough money to do what I need to do. What do you say to some of those? Because obviously you're doing a tremendous amount of work in this space. And so it's not just like, oh, I'm only working for the nonprofits that have this huge cash flow. What do you say to some of those people that are like, I don't know if I can afford to have an accountant?
Yeah. And I think this probably applies with for-profit businesses as well. I, as I mentioned, I used to work in different industries besides just nonprofit. But I think accounting is just an area that a lot of people in the nonprofit space just don't understand. They generally come through the programmatic side, whether it's healthcare, education, or social services, right? They don't have a business background, and they certainly don't have a specialty in accounting. And so if people are telling you, we can't do X, Y, Z, or we can't create this reporting, or we can't have this tracking because of a limitation of the system. And the system that we use is QuickBooks. It's an out-of-the-box solution. It's really inexpensive. It's affordable. It's not proprietary. It can be built in a number of different ways and utilized. Oftentimes it's underutilized. And so what nonprofits do, and I would suspect this is true for for-profits, that because you don't understand what the solution should be, we assume it's a capacity issue. So what a lot of nonprofits will then do, and I'm sure for-profits too, because I've seen this in practice, they will hire more people thinking it's a capacity issue. It's generally not a capacity issue. It's a workflow. It's a system. It's a technology issue. And if you had the right person with the right workflows and you really kind of re-engineered that, you can save a lot of time and then subsequently save a lot of money. And just kind of an example, there was an organization we were working with that has consistently struggled with invoicing. They did the services, they had a source of revenue, they simply had to compile information and send it to the funder. And then if the funder kicked it back, they had to troubleshoot it and resubmit it, much like healthcare, right? I mean, you have to submit invoices and troubleshoot for insurance billing. They had 2 full-time people that they were paying upwards of $250,000 a year to do this, and they were consistently behind. So if they're not getting cash, what's happening? They're in a cash flow crisis. They're laying people off. They're, reducing programs because they didn't have the cash to employ the people. The resources were out there. They just had no way to get it. And we came in and reduced their accounting budget by 1/5. So we charge $50,000 rather than $250,000, and they have no collectivity issues at all. And their cash flow is higher than it's been in probably 5 years. And we've saved them money. So a lot of times it's not, I can't afford it. It's, you have to hire the right person. And I'm not saying I'm the right person for everyone, but if someone's telling you it can't be done, I would get a second opinion, because more likely than not, it's just a limitation on their skill set and their training and their usability of the system, or maybe how the system's set up, rather than we just need to hire more people.